Noah, welcome. Welcome to a Pint of Wisdom podcast sponsored by OnePint.ai, wherein we talk all things AI, supply chain, and brands. Thank you for joining. It's a pleasure to have you on the podcast. What are you up to these days?
It's good to see you too. What am I up to? That's a good question. Um, the last 20 plus years I've been in retail, as you know, as an executive with companies like Restoration Hardware, Levi's, Vineyard Vines, and then most recently CEO, KEH. So that's kept me pretty busy. Um, but now I'm sort of back on the finance side,
Mm-hmm.
in the board side of the world. So I spent 25 years changing companies from the inside, and now I'm investing in companies and changing companies, helping companies. I wouldn't say from the outside, but more from a removed perspective.
Mm-hmm.
So I'm venture partner with Breaking Wave Capital here in New York, which is essentially a VC PE hybrid fund. And I'm still on a couple boards, both profit and non-for-profit. So yeah, I mean, I can't just sit around and do nothing. So try to stay busy.
Yeah, I like the analogy that you use inside and outside. You have seen variety of journeys, especially some of the transformations you have led at iconic brands, Levi's, RH, Vineyard Vines. How was it like if you go down the memory lane? How were the transformations like? Were there any common threads as you carried out in variety of executive capacities? Of course, technology, we are talking about pre-AI era. So how were the transformation like? Could you describe the journeys and any commonalities or common threads you can pull through?
Yeah, I think like I'll start kind of at the meta level, the high level. I think you know I've been in a lot of different industries in my career, so I started in finance, actually in investment banking as an analyst. And then I was in cosmetics with Sephora. That was my first stint in retail.
Mhm.
Uh, Restoration hardware, home furnishings, illuminations, which was candles, and really fragrance, really selling fragrance. Um, Vineyard Vines and Levi's is with apparel. KEH was electronics. So, I guess I've had many kind of different careers within my journey. And it surprised me initially. It doesn't surprise me anymore, but it surprised me initially how many of these companies and industries are similar.
Mhm.
And I would say, depending on the industry, 70% on average is probably the same at the core. What makes a great business and a great brand
Mhm.
runs across. And the things that are different, I think, are important to understand so they don't become blind spots. And that, of course, is the part that gets really interesting because you get to learn things that are new and different. But there's quite a bit that isn't different. And there's quite a bit that I think makes an effective company, an effective team, and a great business that runs through. And I've seen that throughout my career. I think one of the things that we talk about in retail is um, the four P's. Do you know
Mhm.
this? The four
Mhm.
P's:
Yeah, yeah.
product, price, place, and promotion.
Mm-hmm.
And this is something that was spun up probably like in the 80s, I think, with McKinsey.
Yeah.
Um, but I think it's time to retire that. I think the world has changed quite a bit. Digital is center. Technology is advancing faster than any of us can really keep up with.
Mm-hmm.
Um, and so I think it's about sort of adopting something that's more around customer, product, people, and process. So I call that the C3P.
Mm-hmm. Okay. Yeah. I
And
like that.
process includes
Yeah.
systems and technology, you know.
Yeah.
So that's a pretty broad one,
Mm-hmm.
and that's really been the thread that has run throughout the companies that I've been a part of, especially the really successful ones, is that customer was always at the center. And most of those companies that I talked about that I've worked for and worked with were product led. And then there's the people, the talent. I mean, if you take the people out of the business, there's no business. And if you take the customer out, there's certainly no business. So, customer and the people that are in the company are very, very important, if not the most important. And then the process, how you surround that and amplify your people, the customer experience, the product through your processes and your technology, really eliminating barriers in many ways. And being able to focus on the core of what's important to the business. That's all kind of been similar throughout the entirety of my career. And I think the other thing is, a lot of companies talk about innovation.
Yeah.
And a lot of companies focus on scale. Scale is a lazy advantage.
Okay. Explain that.
Well, I think, if you go way, way back, I mean, you could go back to the dinosaurs, but we won't go that far back. But even in modern business, small companies were differentiated, they scaled up, and then the barrier to entry became their scale. And now I think it's less about the big eating the small. And I think it's much more about the fast eating the slow. So being agile and being able to adapt, I think, is paramount as a company. And that does get back to being focused on the C3P. Who is your customer? How are you differentiating your value? If you're product led, that obviously needs to be a focus. And then your people and your process that bring that to life every day. But it's about the speed at which you can do that. It's less about scaling up and then negotiating low costs, right?
Right. No, that's an interesting take. You mentioned customer, right? In C3P model, a lot of companies talk about customer. Amazon is known to be coining the term customer back methodology. Think from customer and work backwards. In your journeys at some of the iconic companies you have worked for, or the variety of transformation initiatives you might have led, how have you made sure that you are keeping customer at the center? And secondly, in any of these transformative journeys, what role supply chain had to play, and what was the role for demand gen, marketing, sales, machinery had to play?
It's a big question. I like it. So again, at kind of the high level, I'd say retail marketing, but really retail in general. Retail marketing stuck on repeat in a lot of ways. I mean, I think retail is fairly slow to move and adopt change, probably because retail has sort of rested on scale is the competitive advantage. Back to the earlier point. And that's no longer something that you can rest on. So you can't just buy cheap and then sell on promo. I mean, you can, but I think that's a race to the bottom. So I think when you look at the marketing side and you look at the front-facing side of the industry, if it feels stale. And I don't think that's because marketing is stale, as much of it's a reflection that retail has gone pretty stale. And it's gotten lazy. And I think obviously the two are tied. I mean, marketing is going to really attempt to amplify and differentiate what your value proposition is, what makes you different to your customers.
Mm-hmm.
And so when we're feeling like the front-facing and marketing side of the industry has gone stale,
Mm-hmm.
it's because the industry has gone stale.
Mm-hmm.
Um,
Are you talking about the big brands, or are you talking about retail industry in general? And is it essentially tied to a factor, e.g., scale, you become complacent, or is it something else to do with it, or we have become just complacent in terms of, hey, let's push ads on Facebook and we'll get customers?
yeah, well, I think it's both, but I think a lot of what we see is probably the bigger brands that have developed a competitive advantage based on scale.
Mm-hmm.
And so we see more of that, right? You're going to see more of like the Target commercials in the world, and that's going to look like the Walmart commercial, and that's going to look like the Gap commercial, and they're all going to have music and dancing probably with right showing people in shorts or people in sweaters depending on the time of year.
Yeah.
Then you get to the store, the product's going to be there's going to be some full price product in the front, but 50% of the store's on sale one way or another.
Mm-hmm. Mm-hmm.
So yeah, so I think that's kind of a reflection of where the industry is. Now, of
Mm-hmm.
course, there's like up and coming brands that are doing really
Mm-hmm.
exciting new things, and
Mm-hmm.
that's what I love the most. Right?
Mm-hmm.
I love the disruptor brands.
Mm-hmm.
I love the innovation. I've been a builder my whole career.
Yeah.
I don't like maintaining, and so when I see the industry getting into maintenance mode
Yeah.
and kind of being stuck on that maintenance mode for a long time. I mean, you could probably tell that I don't enjoy that part very much. I think the good news is we're now entering a phase where I think we're going to see consolidation there, and
Mm.
I think the brands that are disrupting and up and coming are becoming more and more relevant.
Mm-hmm.
These are new products, new business models, um, marketplaces, and that sort of thing.
Mm-hmm.
Um, so I really do like where the industry's going, and I think technology and AI is a big part of that. I mean, right? It lowers the barrier to entry. It makes you through autonomy, through reducing manual work. You don't have to have these armies of people, and you can do so much more, so much less expensively.
Mm-hmm.
You need really good people, but you probably don't need as many people,
Mm-hmm.
and you can leverage technology to enable every part of your business, especially from an operational standpoint. And so
Mm-hmm.
back, the other part of your question was how has supply chain and inventory been a big part of the success across the businesses I've been a part of.
Mm-hmm.
You know, I grew up in product and grew up in merchandising and planning, and I always viewed that as business, like the business center of the business, because it was the most connected to product and customer. And if you're product led and customer led, then it's at the center. And I view planning as a bit more as a business planning than
Mm-hmm.
inventory planning.
Mm-hmm.
So, you know, my philosophy has been that inventory and product
Mm-hmm.
should be a driver of the overall business and commercial strategy.
Mm-hmm.
It's not, the merchants and planners and such, they're not, if that becomes the driving strategy of the business, then you have a problem. Like when you're in a meeting and you hear, what's our inventory strategy,
Mm-hmm.
right?
Mm-hmm.
What's our product strategy?
Yeah.
It's like, wait, now we're stuck in a siloed function,
Sure.
that conversation.
Mm-hmm.
Or when you're in a meeting and you hear, what's the store strategy?
Mm-hmm.
What's the e-commerce strategy? It's like, wait,
Mm-hmm.
no. Now we're talking in P&L silos.
Right.
So whenever a company is in, and most companies operate this way, in a P&L silo or in a functional silo,
Mm-hmm.
that it's starting in the wrong place.
Mm-hmm.
It should start with what's the overarching differentiation of the business, what's our value proposition.
Mm-hmm.
It should be customer focused,
Mm-hmm.
and then these other strategies like supply chain, like
Yeah.
inventory, should enable that.
Enable that. Yeah. They are enabler strategies to the core mission that you are after versus the other way around.
And I would say that, to kind of to amplify it, I would say they're in service to
Mm-hmm. Mm-hmm.
the
Mm.
overarching strategy.
Yeah. Yeah.
And they're an important element of the
Mm-hmm.
overarching strategy.
Mm-hmm.
But they are not separate strategies.
Yeah.
And,
Yeah.
well, if they are, you have a problem,
Yeah. Yeah. Yeah.
right?
That's well said.
And
Yeah.
I think this mentality also allows companies to
Mm.
connect every function of the business back to what what the total overarching mission and drive is.
Mm-hmm.
So, an example at Restoration Hardware, this was a big part of the transformation. At Restoration Hardware, this was a big part of the transformation.
Mm.
We went, when I was there, we went through the housing collapse, the financial housing, bubble
Yeah. Yeah. Financial
collapse,
meltdown. Yeah. Mm-hmm.
2008, 2009.
Yeah.
So you can imagine, right, being in home furnishings, I mean, so directly connected to
Right.
housing.
Yeah.
Um, we took a step back and we said, this is an opportunity to take market share. But in order to do that, we have to truly transform as a company. And
Mm.
everything we've talked about doing, we need to now do, or we need to get into a very defensive position. And we
Mm-hmm.
decided to play offense versus defense. And a big part of this was getting rid of channel silos.
Mm-hmm.
So we had a team for catalog, we had a team for e-commerce, we had a
Mm.
team for stores, a team for outlet,
Mm.
and they were all doing their own thing.
Mm-hmm. Yeah.
And so we reorganized where every team was focused on a product category, but owned
Mm.
that product category across every channel,
Mm-hmm.
essentially eliminating the channel silos.
Sure. Sure. Sure.
And then we reorientated the KPIs to be demand based,
Okay. Mm.
so that it wasn't net of returns and all these other things where you get channel conflict.
Mm-hmm.
And the number one metric was total demand for the business,
Mm-hmm. Mm.
because that's the closest to the customer. That's how the customer
Right.
voted with their dollar, today.
Right. Right.
Um, and then by eliminating these channel conflicts and these sort of below the line metrics that got in the way of really having viewed what how the customer was voting every day.
Mm-hmm.
And the other big thing was category P&Ls.
Mm.
So we had a profitability view directly into product. These were all the major ingredients to the transformation of Restoration Hardware.
Mm-hmm. Mm-hmm. Yeah. That's
This enabled
interesting.
all the other things that you see
Yeah.
on the front end,
Yeah. It sounds,
because
sounds,
it
sounds,
allowed
sound,
the company to focus.
yeah, it sounded like very structural change. And if you see it through that lens, all the other things don't matter. You can reduce a lot of waste, a lot of inefficiencies that get built in when you operate in silos, and
Exactly.
you're optimizing for whole, I guess. Yeah.
Exactly. And everyone in the organization is focused on the same thing.
Mm-hmm.
So you're
Yeah.
not in meetings saying, well, our sales were actually 10% higher if you take out online returns.
Mm-hmm. Sure.
Like, that conversation no longer happens,
Mm-hmm. Mm-hmm.
right? Or who's going to get credit for the sale in
Mm-hmm.
the store or e-commerce? It's like,
Mm-hmm.
what are we
Yeah.
talking about here,
Right.
right?
Right. Right. So fast
But
forward.
that conversation is happening today in probably 90% of medium to large scale companies.
Sure. 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 Agreed. So fast forward now that we are in AI era, right? AI is flavor of the season. It feels like we have iPhone moment, .com moment. How do you see brands adapting for this agentic commerce era, wherein agents would drive the decisions from consumer lens, or agents can potentially disintermediate you, right? They'll create that separation between you and the customer. How
Oh,
should
wait, is that wait, through this suck one second. There, are you, it froze on your side. Is that just your side or my side?
it's fine on my side, but
Okay.
yeah, we can
Do you want
continue.
to start that again?
Yeah, no, I was asking if you fast forward from AI perspective, agentic commerce happening, agents, you would talk to probably agent versus, merchant on the other side. or you'll have agent to agent conversations. So how should brands be thinking about agentic commerce, wherein you could potentially be 1 degree away from customer now that your agents would disintermediate you? So how do you think about agentic commerce and what it means for brands?
Yeah, everyone's saying using agentic now, right? It's like the
Yeah.
buzzword is. I mean, the buzzword was probably crypto, or tokenization, or decentralization, um, quant. Now it's AI and agentic. I think one, we've got to kind of demystify some of these things a bit,
Yeah.
and
Yeah. Sure.
um, and talk about what are the enablers, right? So I think one of the common things we're talking about is I think there's this tendency to look at the results,
Mm-hmm.
which are the front end of things, growth, what does the marketing look like, agentic, and there's this tendency to fast forward to the end, right?
Mm-hmm. Mm-hmm.
Um, without focusing on the really important foundational building blocks to get there.
Mm-hmm.
And really what it takes to execute in order for that to become a reality in
Sure.
a meaningful way,
Sure.
not just like shiny object kind of window dressing.
Right.
So, which I think there's a lot of that going on nowadays, right?
Mm-hmm.
Companies that are saying that they're AI focused have a 20 to 30% increase in their valuation. Are
Mm-hmm.
they? I
Mm-hmm.
mean, I
Sure.
can tell you by looking at a lot of companies
Mm.
um, that was spun up 10 years ago in
Mm-hmm.
representing themselves as AI native,
Mm-hmm.
as they're not AI native, right? I
Sure.
mean, if your company hasn't started in the last 3 years, then you can't be AI native. You have to be maybe AI enabled, or you're pivoting.
Mm-hmm.
So, I think it's really important to look at kind of what's behind the curtain, is talking about agentic commerce and AI.
Mm-hmm.
So first, the data.
Mm-hmm.
So is your source data, um, the system of record, in a really strong place?
Mm-hmm.
That's the bedrock. That is your
Yeah.
foundation for the house.
Right. Right.
And then on top of that are your systems and your processes and your systems.
Mm-hmm.
Okay? These are the things that your people and the functions in your company interface with every day to
Mm-hmm.
do their work.
Mm-hmm.
Your marketing team, your merchandising team, your inventory team. On top of that sits AI and agentic.
Mm-hmm.
So if you have the first two pieces, then I think you're in a place where you can look at automation and
Mm-hmm.
say, you know, where can we model things that we know work or are routine, or we need more iteration in order to derive the best outcomes. Where are there highly manual processes within the company
Mm-hmm.
that we can automate?
Mm-hmm. Yeah.
That's a great place to start.
Mm-hmm.
But you've got to have the first two pieces in place. You have to have the foundational data, the systems, and then you
Yeah.
can start with automation. And
Mm-hmm.
that really, agentic to me is just another way of saying automation.
Mm-hmm.
And I think when you're there in a place to be able to do that, I think you start with highly manual,
Yeah.
and then you can go to things like products, and you can go to things like your kind of more complex processes in the company,
Mm-hmm.
um, and customer.
Mm-hmm.
And so your AI can start to layer into the places that your company provides the most value.
Mm-hmm.
So if you're service led,
Mm-hmm.
you probably want to focus on agentic that is service and customer focused.
Mm-hmm.
If you're product led, then you probably want to focus on agentic that's going to help on the product leadership side.
Mm-hmm.
But to me, that's secondary to eliminating
Yeah.
the highly manual processes in the company.
Right, right. One is inward focused, and the other is customer focused, initiatives or objectives. So, how do you see? I mean, technology is rapidly evolving. Every few months, we have a new model from one of the frontier model companies coming out. How do you see in 6 months, 12 months, 18 months out? How do you see some of these things getting adopted? On one hand, you have the AI cost. On the other hand, you have you don't want, you have fear of missing out, and you don't want to be laggard, right? So how do you deal with all of that, especially from mid-sized brand perspective, right? If you have $100 million brand, $200 million brand, you don't have unlimited capital and resources. So how do you deal with this evolving technology? Where do you start, and how should you think about future?
Yeah, the so in my current role, I'm looking at, on the deal flow side, hundreds of companies.
Mm-hmm.
And in venture especially, the ratio is, for every 100 companies, you might find one really good company that fits your thesis that's investable. So the positive side of that is I see how a lot of different companies are operating, and when I can, and back to your question,
Mm-hmm.
um, one of the dimensions that we look at is, are they AI enabled? Is there an AI readiness?
Mm-hmm.
Um, and there's three kind of major categories that I think companies fit into. And companies need to first look inward and be real with themselves of which bucket they're in. Because you don't need to be AI native, but you need to be honest about where you stand.
Mm-hmm.
You need to be AI honest.
Sure.
So the three buckets would be, an AI native company. So this would typically be a technology, like One Pint, right? I
Mm-hmm.
mean,
Mm-hmm.
spun up in the last few years.
Yeah.
If you spun up in the last few years and you're technology based and you're not AI native,
Mm-hmm.
I mean, right?
Sure.
What you might want to do something else,
That's right.
right, with your life. So there's AI native, and then there's AI enabled, and then there's AI deficient.
Sure. Okay. Yeah.
And a company needs to look inward and say, which one are we? And the most obvious is AI native, right? A company that's spun up in the last few years that's technology
Mm-hmm.
based. Okay, we
Mm-hmm.
get it. The other two buckets are a little bit harder, and you have to be more honest with yourself to say where you really stand.
Mm-hmm.
If you have great foundational data and you have systems on top of that, they're pretty good. You've got good talent in seat, and you can pivot to
Mm-hmm.
layering on AI capabilities, agentic capabilities, automations.
Mm-hmm.
A lot of things that you probably were already doing, but accelerate those things, right?
Mm-hmm. Mm-hmm.
If not, then you need to look in the mirror and say we're AI deficient,
Mm-hmm. Mm-hmm.
and we have to excel. We have to really pivot to stay relevant.
Mm-hmm. Right.
I mean, to me, any company that is AI deficient is by definition a turnaround. It's a
Mm-hmm.
turnaround company,
Sure. Sure.
even
Sure.
if they don't recognize it.
Right.
And honestly,
Mm-hmm.
I in my currency, I view them as non-investable.
Hmm. Yeah. Yeah. No, that's a
Right?
good. That's a.
Right? Maybe
That's,
they're investable down the road when they run out of cash, and you can buy them on the cheap. But
right.
that's not what we do. So for
Yeah.
us, they're non-investable. But yeah, and so I think companies first need to be really focused on being true and AI honest with themselves,
Mm-hmm.
and they can't fall victim to catering to the board,
Mm-hmm.
and having a couple small initiatives
Yeah. And claim
that are
that
adding
as
no value, probably wasting money and providing a distraction for the
right.
teams.
Right.
You'd be better off being AI deficient than that. That's probably the last bucket, which is
Mm-hmm.
AI delusional, probably.
Yeah, so we got the fourth category, but I presume if you are not AI native, if you're not a technology company, you are selling footwear, you are selling clothes, you are selling sunglasses, right? And but you do have an insight on the market, and you want to disrupt the market and create new categories. I'm talking about non-technology companies who are coming out in the market. Beauty is a classic example wherein you have a lot of indie brands coming out. What advice you would have for them in terms of how should they think about, they might not be AI delusional, they might be AI deficient because they're still figuring it out. Of course, they are not AI native. How can they quickly think about ramping up their on AI to better serve customers, to increase their bottom line, to increase their sales throughput? So, what advice you would have for non-tech companies in terms of how they should be thinking about adopting AI?
So I think if you're a small to mid-sized company, you should look at AI as a competitive advantage.
Mm-hmm.
That helps take advantage of your smaller scale and your ability to be fast,
Mm-hmm.
right? Less bureaucracy, less red tape, and less people.
Mm-hmm.
So that, in my view, is prime. Like that's a green light for not
Mm-hmm.
should we be AI enabled? We absolutely have to be AI enabled. That will accelerate our speed and differentiation. Um, and then it's a question of where and how.
Mm-hmm.
That's kind of more fun question to ask, right?
Yeah.
So, and
Yeah.
that's going to be different for every company.
Mm-hmm.
But when I look at companies and I grade companies,
Yeah.
um, I grade if the value based upon the value proposition. And
Mm-hmm.
so, is the value prop what makes them what they're famous for and what they're differentiated for, which again is different, by company, by category.
Yeah.
But are they clear on that?
Mm-hmm.
Right? Can you understand that in 3 seconds, 5 seconds? Right?
Mm-hmm.
That's not even an elevator pitch. That should be like, like if you said Apple, it's like,
Mm-hmm.
okay,
Yeah.
right? No one has to explain it. You get it very quickly.
Mm-hmm.
So um, then the people, is the organization pointed in that same direction,
Mm-hmm.
right? Or the majority of the organization. I mean, we're
Sure.
always improving and evolving and
Yeah.
adapting, but is the organization focused to
Mm-hmm.
deliver on that value proposition?
Mm-hmm.
And then what's their AI posture to
Mm-hmm.
amplify those things?
Mm-hmm.
And if those three things are pointed in the same direction, they have a very good chance of being successful.
Right. Right. So essentially being clear about value proposition, uh, what differentiates you from others, and pointing all of your investments, both technology and people, towards that, I guess.
Exactly.
Yeah.
And so for a product-led company, like
Mm-hmm.
let's say it's a cosmetic company
Sure.
and they have differentiated product, right? They sort of, I always think back to, we've been talking a lot about value prop.
Yeah.
I think there's three major buckets. And this was established a long time ago, and I think this is one of those things that actually still holds true. Other than the 4P,
Mm-hmm.
which is kind of irrelevant, I think this one actually still holds true, which is, are you product led?
Mm-hmm.
Are you service led? Or are you price led?
Mm-hmm.
Those are, to demystify the value proposition.
Yeah.
That's the value proposition, and you can only pick one.
Mm-hmm. Sure. Sure.
Everything else is in service to that one. So when you
Mm-hmm.
hear companies say, we
Yeah.
want to be the best in service, we want to be the best in product, it's like, wait, those are
Right.
two different companies.
Right. Right.
And then, is when you say, well, don't you care about the service that we deliver? Of course, right?
Mm-hmm.
Like, but But when someone wakes up in the morning, when a potential customer wakes up in the morning, do they think about your product being differentiated? Do they think about your service being differentiated? Meaning you probably sell products that everyone else has, but you deliver it in a way that no one else can.
Yeah.
Or are you price-led, meaning you probably also sell product that everyone else has, but at the lowest price, or maybe the best value. But let's be honest.
Sure.
Usually it's kind of very closely tied. Like say Amazon. Amazon says they're price-led.
Yeah, sure.
And you'd say, well, what about Prime? Well, Prime is baked into the price. You don't pay for shipping.
Sure. Right.
It's not a service, it's price.
Right.
So Nordstrom, there's very few examples of service-led companies. Nordstrom's one of them. Zappos. I think it's the hardest one to differentiate because customers generally don't want to pay for service. Most companies are product-led. Especially in the retail realm. And so if you're product-led, then I'd say, okay, what helps us in product leadership? What helps the whole organization accelerate that and differentiate that and bring that proposition to life for customers? And then I'd say, what's everything that surrounds product? Well, it's how you make assortment decisions, right? It's how you make probably pricing decisions within the market. It's how you deliver that if you're e-commerce. What does your e-commerce platform look like? But I'd also look at all of the enabling factors underneath that. Inventory, supply chain. Like what does your go-to-market look like? Are there ways that we can shrink that go-to-market, therefore be closer to the customer? And so, a lot of that's agility and speed.
So Noah, from this macro point, you just now mentioned inventory and supply chain. I'm curious to get your thoughts. If somebody who is running a mid-sized brand listening to this podcast, how would you advise? Because what I have seen typically is, when brands are growing, there's so much focus on marketing and sales and go-to-market, right, within the customer. And sometimes supply chain and inventory management is an afterthought. Right or wrong, but that typically happens. What advice you would have for them? When should they think about supply chain inventory management seriously? How should they think about data and decisioning around that? Because it has amplification effect in terms of what sales uplift you could have, right? Or what kind of NPS score you would have from the customers.
Well, I guess, so speed, we talked a lot about speed. Speed is not fast fashion. Speed is how fast your total organization can move.
Speed to execution, right?
Yes. And if you are product led, then a big part of your speed is, it's really two parts. Your go-to-market. What does your go-to-market look like? So from kind of product inception to being able to being in stock on your website where the customer can buy it. That's a big part of your speed. And then the other part is once you have a signal, could be demand signal, supply signal, whatever, how quickly can you adapt? So that together is really a big part of how fast you can move as an organization.
Right.
And you're only as fast as your slowest component, right?
Sure. Yeah.
And so I'd say if you're product led and you don't have a supply chain, inventory management, forecasting capability that enables that speed and go to market, you're in trouble. Because you're going to be slow. And I would say you have to be fast, especially unless you're Walmart, right? That's a different story. But if you're small to mid-size, you have to be fast. And so you've got your supply chain is part of your product leadership. Your inventory is part of your product leadership. Your customer cannot buy something or participate in your brand if you're not in stock.
Mhm. Right.
If you're overstock, what are you going to be doing? You're going to be marking down that product,
Right.
and thus you're going to be diluting your brand.
Mhm. Mhm.
The first time a lot of your customers, if you're on sale all year, the first time that they participate in your brand will probably be at 30% off.
Mhm. Mhm.
Well,
Mhm.
that's the price of your brand.
Yeah. Then that becomes the value that customer is willing to pay.
Exactly. So this, I think again, it's about kind of de-siloing and saying,
Mm.
in order to be customer focused and product led, what are the things that we need to be really great at
Mhm.
in order for that to be our value proposition?
Mhm.
And I
Mhm.
think supply chain and inventory is intrinsic to
Mhm.
product leadership.
Mhm. And where do you see D2C brands and multi-channel brands go wrong? What goes wrong? And I'm pretty sure it's a life cycle journey from 0 to 50 million, 50 to 250 million, and $1 billion and above. Where do they go wrong? And what kind of interventions they should be thinking about at each stage of their journey, specifically around um, supply chain planning and some of those sort of foundational but afterthought items.
Yeah, well, there's a lot of places that you can go wrong as you scale. I think some of the common places are lack of focus.
Hmm.
So back to the C3P
Mm-hmm.
proposition, they become focused on things that are outside of the customer, product, people, and systems. Their organization thus becomes diluted in its focus. So, concretely, a company might start out. I mean, look at Vineyard Vines, right? They started out with ties. They did not add another category until they hit a certain volume threshold
Mm-hmm.
for ties.
Mm-hmm.
I mean,
Yeah,
how easy would it have been
sure.
to say,
Let's
we
add one
need a
more.
button-up shirt,
Sure, 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 sure.
right? Like, you wouldn't have to argue that. Like, if you're
Right.
selling ties, you might want the shirt that ties around. But they stayed focused
Focus. Yeah.
on the thing that differentiated them from everybody else
Right.
to be able to get to thresholds where they had product leadership to then kind of, I guess, justify and earn the right to add another
Mm-hmm.
thing.
Mm-hmm. Mm-hmm. Yeah. And
And
that brings
also
and that
knowing that
I'm assuming that brings a lot of simplicity in the organization as well, or your supply chain. Everything gets becomes simple, your cost structures become simple once you attain product leadership in one category by having that focus.
it's the focus, yeah. And being clear on, give yourself thresholds for maybe it's a volume threshold, right? Or maybe it's a number of customers, or to say and be, don't shoot low, shoot high.
Mm-hmm.
But don't, I'd say falling victim to distraction
Mm-hmm.
is one of the easiest things to do as you scale,
Mm-hmm.
and it actually prevents scaling.
Mm-hmm. Mm-hmm.
And
Right.
and I think another thing is that I've seen a lot of, be really truthful with yourself of how big your market, like what's the TAM, and what's the realistic percentage of that total market
Mm-hmm.
that you're gonna capture.
Yeah.
And because I've seen brands that are 100 million, 200 million
Mm-hmm.
scale up, and they convince themselves that they should be $1 billion brand,
Mm-hmm.
and they shouldn't.
Mm-hmm. Okay. Yeah. Yeah. Yeah.
But and there's nothing wrong with saying being a no. Maybe they could be 350 million or 500 million,
Mm.
but there's nothing wrong with being a really profitable $500 million business.
Right. Yeah.
You
And
don't
there
have
are,
to be you don't have to be everything to everyone. And by the way, you can't be.
yeah, yeah, of course, of course, of course.
So if you want a prime example of this, all you have to do in the US,
Mm.
look at department stores.
Mm-hmm. Sure.
They've tried to be everything to everybody. They
Mm-hmm.
got behind the curve in technology,
Yeah.
They were slow. They were very slow to adopt e-commerce,
Mm-hmm.
and they are on. The entire industry is on a downward spiral to irrelevance.
Right.
They
Right.
miss like digital marketplace,
Sure.
right?
Sure.
I mean, a lot of these companies, like it's
Mm,
they had a digital strategy in the last 5 years. I mean, it's
mm,
like
mm,
it's too late.
mm,
So you know,
yeah.
distracted, diluted, and
Yeah.
slow to pivot back to the speed.
Mm,
These are all the things that happen. You cannot get slow, you cannot get complacent, you cannot get distracted. And the other thing I'd say is
mm,
understand the full scope of your business. If you're product led,
mm,
you've got to look at how your products, all points of distribution, and you've got to look at every life phase of your.
mm-hmm. Right. Yeah. I think you said it well in terms of how brands could be thinking about their value proposition, speed to execution, focus versus distraction. You brought a lot of things which ultimately are important ingredients to making things right, I guess. And it has ramification in what you do. Where do you source from? Where do you procure from? Where do you manufacture? What's your cycle times? How do you show up to the customer? All of that stuff. But yeah, this
Yep.
is this is this is this is fascinating conversation, Noah. Yeah, please.
Yeah, I'd also say a lot of those distractions come from the top.
Hmm. Hmm.
So they come from the boardroom,
Hmm.
which
Hmm.
is often detached,
Yeah. Yeah.
either through investors that think that they can fly the plane.
Hmm.
Right? They've sat in first class their whole life, and they think they can fly the plane better than the pilot.
Yeah.
And they'll come up with all these ideas, right? They
Hmm.
were to lunch with someone, the person said, "Are you agentic?" And now they're in the boardroom saying, "Are we agentic?"
Hmm. Hmm. Sure.
Um,
Right.
and and then what happens is in leadership, it's actually much easier
Hmm.
to have 20 initiatives than it is to have three,
Yeah. Yeah. Yeah.
because when you put your neck on the line
Yeah.
for three
Yeah.
and two of them don't work out,
Yeah. Yeah. You'll be out in the open. Sure.
so it's easier to fire the shotgun, spread it out, right?
Yeah. Yeah.
Kind of distract.
Sure.
But
Right.
it's not the right thing for the organization. It's
Yeah.
not the right thing for the business.
Yeah. Yeah. And I think, yeah, that's a fundamental aspect of it. What whether leaders do the talk and act the talk, right? In that sense,
Exactly.
what do they really shoot for? Uh, because rest of the organization CEO role and CXOs are really important to kind of drive the organization
Yes, and
in one
that's the
direction.
biggest blind. That's the biggest blind spot that I
Yeah.
see
Yeah.
from an investment and board perspective.
Mm-hmm.
The biggest blind spot is it's not the technology.
Mm.
The It's answering the AI maturity question and the proliferation of possibility question
Mm-hmm.
for the board.
Mm-hmm. Yeah.
Um,
Yeah.
and being able to stay focused
Yeah.
uh, and answering that question not for the board but answering that question for the business,
Yeah. Yeah.
and then bringing that back to the board with a very clear point of view,
Mm-hmm.
and bringing that into your organization with a very.
Mm. Yeah. Yeah.
This takes guts,
Yeah. Yeah.
but this is what leadership is in my
Yeah.
view.
Yeah. Yeah.
That management's different.
Yeah. Yeah.
Leadership takes prioritization and it takes risk.
Right, right. Yeah. I always say that, in any organization, bureaucracy start from the top, not from the bottom.
Yeah. So my CTO at KH would say, a fish rots from its head.
Mhm.
So, don't like the positive side of that is this is unequal time
Hmm.
right
Hmm.
now. We're in a time of unquestionable transformation
Mhm.
and opportunity,
Mhm.
and it's an opportunity. So it's something to kind of demystify and see as an enabler for your organization, and for leaders to really step up
Yeah.
and have a point of view,
Yeah.
focus the organization. Um, and AI, I think, is part of that. Technology is part of that. It's as an enabler, but it requires being really clear on what you're trying to achieve,
Right.
and then how is technology enabling
Yeah.
that.
Yeah.
I kind of liken it. I like analogies. So
Hmm.
it's technology and AI is much like a race car,
Mhm.
in a sense. The race car is only as good as the driver,
Mhm.
and the driver is only as good as the car.
Mhm. Mhm.
And it's that sort of when if you get to that place of being in
Complete harmony.
synchronization,
Yeah. Mhm.
that's when you can win the race.
Right. Right.
And and it allows you to adapt. Well, obviously speed, right? Be
Sure.
really fast
Sure.
and adapt to all of the things that you can't control that are happening outside of the car.
Right.
The weather, the other drivers, your competitors,
Yeah.
all of the other things that are inevitable will happen every single day. Some
Mhm.
you'll foresee, some you won't. But by being really focused and in unison in your, as a driver and your enablers,
Yeah.
the car, it can enable you to be really fast, adapt, and win the race.
Yeah. That's well said and great analogy. Noah, thank you so much for spending time with me today. Really fascinating conversation. I think we touched upon large brands, mid-sized brands, talked about supply chain, AI. I love your frameworks, especially C3Ps. You can get it trademarked if you have not done yet. But really, thank you so much for spending time and sharing thoughts and insights. Hopefully, it's helpful to brands and brand leaders listening to this podcast, and they can get benefited out of it.
Thank you. It's been a pleasure.
Thank you, Numa.